These are the topics you should cover in your LOI to buy a business. Now, LOIs can be tricky because you don't want them to be too detailed. At this point, you don't want to get hung up in negotiations with the seller. You really just want to hit the high points of your offer. But at the same time, there are some really important topics that you don't want to leave open to the purchase agreement. And we see this all the time where people are maybe going back and forth between details and then someone comes in and swoops and buys the business out from under. You want to get 20 grand and 2 months into a deal to start talking about working capital or big major pieces that can be make or break for the transaction. The first thing you need to have in your LOI is, of course, exclusivity. You cannot have the seller out there shopping the deal while you're spending all this time and money on it. Should cover the big thing, is it's going to be a stock purchase or an asset purchase, or if it's a stock purchase, is it going to be subject to what's called the 330H10 rule, which basically means it's a stock purchase taxed as an asset service, because that makes a big difference in the tax profile of the acquisition or the sale for both parties. Obviously, you need to include your total price. You also need to say how much of the deal is going to be seller financed and what are the terms of the seller financing. You make sure that includes the number of years that the note's going to be, interest rate, whether interest accrues on a standby period, if there is a standby period. Next, most important thing is working capital. You need to know the working capital needs of the business before you make an offer to buy the business. And working capital is just the cash that you need to run the day-to-day operations of the business. You're going to need a lot of it at first because, say, in an extreme example, let's say you have a business where your customers have 90 days to pay you for the services you're offering. That means you have to go 90 days without any revenue. So you have all your expenses, you have to pay your employees, material costs, everything, and the cash doesn't come in for 90 days later. So you need 90 days of expenses on hand minimum for that type of business. But then there are also some businesses that don't require really any working capital. And for those, you're not going to need anywhere near as much. But why you need to know this before you make an offer is we've looked at businesses where the working capital need is basically equal to the price of the business. So it's $1.5 million business, but they need $1.5 million of working capital. So really it's a $3 million deal. So that means within the contract needs to say if the seller's going to leave any cash, accounts receivable, and what inventory is going to be left in the business. Usually we set a minimum level of inventory. Now, typically in this space, most deals don't come with working capital. Typically the buyer brings their own working capital. They typically go as asset purchases, but that's not always the case. So you need to see if it's a small amount that's needed. Sometimes it's better to just let the seller keep the cash and the accounts receivable and you come and bring new cash into the business. If it needs a lot, you're not going to be able to get more than $500,000 of working capital from the bank. So if you have that business that needs $1.5 million of working capital, $1 million of it's going to have to come from the seller. So you need to work through exactly how you structure that. Typically, it's going to come in the form of accounts receivable. Next, in your LOI, you need to say if there's going to be an escrow deposit. Typically, we do $5,000 deposits. Some brokers ask for more. We have some ask for $50,000, $100,000. I'd say 9 out of 10 deals we do with just $5,000. If they ask for a huge amount, we usually negotiate it down. Typically though, a hard line for us is we're not putting more down than what the actual down payment's gonna be. But you'd be surprised how often really bad brokers ask for that. Next, you're gonna need your expected close date. Typically we go out 90 days for most deals. Honestly, most deals end up taking longer than that, and you have to file an extension or some point along the way. But 90 days, good starting point. Then another more controversial topic is an expiration of the offer. So meaning you put in an offer on Tuesday that says this offer expires Friday at 5 o'clock. Now with this one, I just want to be mindful of who I'm giving those terms to. Typically the sellers that they've owned their business for 30, 40 years and, really built it up from nothing and it's their absolute baby. Sometimes being hard like that can turn them away. They're not as money focused, they're really more legacy focused, so they want to make sure that they're selling to the right person. So for that type of seller, sometimes we won't put an expiration date in just because we think it might turn them away from us and gives us essentially them a negative view of us as buyers. Other sellers, you want to put some type of expiration so that they're not out there shopping your deal around. This is one, you're just gonna have to go after your gut feel. Is having this expiration date going to help me or hurt me? And then some things that can be in the LOI, often we don't put them in our LOIs, but they definitely could be, is of course the terms around the non-compete. Usually most sellers, the non-compete's not an issue. It's really never been an issue in really any of our deals. So it's something we don't worry too much about saving that for the purchase agreement, but it's definitely something you can put in your LOI. Rent, a lot of the times they like to see what the rent payment's going to be, if the seller is going to maintain the building. What's tough about this and doing it at LOI stage is I feel like we don't have enough info at that point about the building to really properly assess whether the rent is good or bad. But it's a big part of the deal structure, so often it is a necessity to essentially agree to a rent term during the LOI phase. And another one is transition support. Usually we don't have a hard time getting the sellers to agree to transition support, but that is something that can be laid out in the LOI. So just remember, the purpose of the LOI is to get a big picture agreement to the deal, not to get bogged down in the details. Save that for the purchase agreement.